So what's the lesson you learn here? The lesson you learn here is it's okay to trade on a 10-minute candle. It's okay to trade on a 2-hour candle, but you got to scrub it through the dailies and the weeklies. Why? Just in case you beep up, just in case you're on the wrong side. People, there's a lot of people just getting completely blown out of their accounts today, all over the country, everywhere, shorts at Robinhood, TD, everywhere. They didn't see this coming. Did I see it coming? Not exactly to play out this, but what did I see? Here's what I saw. I ran the weeklies, didn't like that configuration. I ran the dailies and said, oh crap, okay, the MACD's turning and it's going upward. I don't short on the way up. I just don't do it, okay? I don't do it. It's on the way up. People are like, what are you short? I short a little Snap. It's on the way down. I'm short a little Tupperware cover this morning. It was on the way down, okay? Short a little bit of what? Cube on the stock. It's on the way down. I short when it's flat and on the way down. Why? So I don't get squeezed on a day like today. That's why. Now, this is one setup. And it's not one indicator that makes the trade. Like people ask me, what do you defer to? All of them. I look at the candles. Don't like that bullish candle. That's bullish, man. It's not a Maribozu where it opens at the bottom and closes at the top, but it's pretty damn close. Look at that sucker. Don't like the fact that what? The RSI's vertical. Don't like the fact the MACD's going vertical, and don't like the fact that the transitionary period for the slow stoke is up. I won't short this at any price. And then your defense is, well, what if it drops 100 today? Let it drop 100. Jimmy Crack Horn, I don't care. I don't trade against angles. I don't trade against slopes. I don't trade against indicators. I've been around 32 years. I design a lot of systems. I teach mentorship programs. I don't do things like that. I don't fight trends if I can help it. It depends on the underlying. And this product is the go-to product that everybody piles into every day because it's the ultimate hedging product. Not just US people, Chinese, Singapore, Europe. It doesn't matter. This is the most liquid product in the world. What the hell did you think was going to happen? Did you actually think this was going to back off after it broke up today? You might get follow through tomorrow. You might not. But the technical setup is the thing that's driving it. But what if tomorrow, if Biden wins, it still might go up? If you're trading off the election, shame on you. Okay? Shame on you for trading off the election on a product like this. Put the election aside. Don't lose sight of managing risk here. If you can't manage the risk, you're never going to survive in this thing. What's the risk of it going higher? A lot higher. Look, it's not even close to the 70 handle. Look at the MACD turning. Okay? I'm projecting it higher, but what if it doesn't get there? Then I'll revisit the trade. But as long as it's on its way up, I'm not touching this to short. Well, then buy it. I'm not going to buy it. I'm a contrarian. I don't buy it. I bought it. I bought Intel. I bought Verizon. I bought AT&T when they crashed on Friday. I loaded up and I sold them today. I'm out of the contest. Sold Verizon yesterday, AT&T today, and half my Intel today. I'm out. I bought when people panicked, sold them. That's what I do. Why? Because I'm only going to make a little bit of money, but it's good enough for me because my risk is low and my potential probability for success is high. That's what you are when you're a contrarian. Contrarians are wrong a lot, but we manage risk well, okay? Trend traders and momos are not wrong very often at all, but it only takes one day to blow them up because the risk to manage trend and FOMO and momo are a lot more difficult. It's not that one system or strategy is better than another. It's about the risk-reward trade-off. And I am just not going to buy in the middle of this, nor am I going to short something on the way up. Okay. It's in no man's land. I'm in the middle of this. It's a terrible risk reward trade-off. You're guessing. I don't guess. I don't guess at 50% pivots. I take things where I look at it and go, hey, if I got a 90 down, 90 up, 10 down, I'll do it. But what if it doesn't move for a few days? Then it doesn't move for a few days and I don't care. I'll just wait. And I waited on Intel. I waited that sucker and I bought it at 44. I waited it out. Didn't come the first day. I bought it a couple days early. Doesn't matter. I'm back in the running now. It's okay. That's what happens when you're a contrarian. Like Don says, it's duration over direction. Now, this happens to be one look at the E-minis, and we're still trending up. But why are we trending up? I told you, if you just throw up and look at a 90-day 4-hour, it's vertical, people. It's vertical, and you're shorting vertical. Okay, this could conceivably end up, I have no idea. It could end up 190. I don't know. No clue. All I can tell you is just by looking at this, okay, it's still vertical. It completed the cycle down here. It's just starting to build the cycle upward. Think about what you do before you trade. Even buying here, it could fail in reverse. It's no guarantee. I'm all about setups. I project damage and go, if the damage could get worse, I'm not going to do it. If the damage can't get that much worse, I might take the trade. But I don't like shorting things that are vertical like this. But I also look at other things. It's not just this one set of indicators, okay, that I sift through. Let me give you another one. I have 9 sets here. And by the way, if you go to my archive, which is about 1,000 deep, and there's like 11 different categories, okay? I cover every single, like what I think is important or relative, obtuse, under the radar, obvious, popular indicator on the planet, okay? I was literally the shell answer man at TD Ameritrade Thinkorswim. You can ask Don. I was the go-to guy. I was a hedge fund manager for many years, Wall Street analyst. I'm a CMT. I teach the CFA courses. I'm not just all technical. I'm fundamental too. And what I can tell you about being a fundamentalist is, okay, valuations actually do matter at some point. But what you're going to find in this business, as I always say, is valuations don't matter on the way up. They only matter on the way down, people. That's a lesson from me to you. So let me show you what this looks like, okay? Is this the same thing as the MACD slow stochastic RSI setup? It's not. It's completely different in many ways, and yet there's a similarity. Well, what's the similarity? Well, I got a trend indicator. I got a momentum indicator. And I got an overbought, oversold strength indicator. So how do I use this? Almost the same, except one thing. This is not a MACD. It's a volume-weighted MACD. So what this is it integrates volume into the actual formula. The other one's MACD is completely price-driven. This one's price and volume-driven, which makes it a money flow indicator. So I can detect what? I can detect wild shifts based upon what? Sentiment. The other one lacks sentiment. This one integrates a bit of sentiment. They're mildly different. Where do I learn more about this? In my archive. Go nuts. You can get, I just got an email because I get emails all day long now since we have like close to 7,000 members, like literally all day long and all night long. And I do a mentorship program. One of the new members, names will remain innocent. Adam says to me, he goes, "My God, your archive is insane. It's incredible. I'm going to spend weeks in here." Yes, that's what it's designed to do. Okay. You don't need to go to college. You don't need to go to Vector Vest or whatever, go to a school. Just go to the archive. Whatever you're looking for, I promise it's in there somewhere under any one of those categories. MACD is a momentum indicator. So I've profiled the MACD in many, many different dimensions. I've talked about different MACDs, weekly MACDs, reverse engineering MACDs, daily MACDs, MACD with prices, MACD with histogram, MACD 2-line. I got it all. Go to the archive. Don't send me an email. Go to the archive and watch the coaching sessions. It maps everything out. And you can literally build your own system. The reason why people come to the mentorship program is because they either have a system and want to tweak it, or they have a system that's not doing really well and they want to fix it, or they don't have much of a system. Either or, I help you build the system and learn how to do trade management skills. That's what it's all about, my mentorship program. So I digress for a second. Getting back here, what do I see in this that I don't see in the other one? Okay, first things first, okay? In the Williams percent R, that's Bill Williams percent R, okay? This is overbought. Now, in the slow stochastic, it's not. Well, why is it? Because they're built on different formulas. In the slow stoch, it's an 80-20. This one's a -20, -80. So they flip-flop the overbought, oversold thresholds. That's number one. Number two is, this is based upon what? A 10-day, because I'm looking at a daily chart, a 10-day look. The other one, okay, is also built on a 10-day look too, but that one has a smoothing factor that this one doesn't have. That one's a double line plot. This one's a single line plot. The double line plot is to do what? Is to basically mark an indicator moving at two different speeds. So when they eventually converge and come together, it often indicates what? A peak or a trough. Huh? Something cool, huh? Come back to TheoTrade. You'll learn more about this. You'll learn more about that you need to know. So you'll never have to watch TV ever again, and you'll become a complete what? You become a complete like trading like narc, just sitting here all day long watching at this. We love this stuff. We do this for a living every day, 365. We know it, and we're teaching it to you and giving it to you. We love doing this stuff. So this, okay, can't chase that. Why? It's overbought. But I can't short it either. Why? Because the algos are going to buy overbought. They're going to chase performance. Better off letting it go sideways and letting it come in. But I'm going to give up slippage. Then you give up slippage. Better to be on the right side of the trade so you don't stress and get squeezed than not. So if you're going to go long here, you might be a little late. Now, here's the thing. The PSAR dot is now underneath it. It's gone from bearish to bullish. This is a bullish, trend signal. How long is it going to last? I don't know. But the one thing I can tell you is this. The PSAR is driven by the sensitivity of how close the price action is to the actual dots. When the dots are above the price action, it's bearish. When the dots below the price action, the primary trend is up. It's a system designed by Wells Wilder, which is a trail stop system based upon price sensitivity. So there's bullish. That's bullish. You should be long. See the delta or the differential between the dot and that? That's extremely bullish. That's ridiculously bullish. If you're shorting that and you're using this setup, okay, you're violating the rules. You don't short that. You buy it. You buy it. But that might be early to buy. It's better to buy when it's closer to the dot than not. But it ran away. See right there when it was close to the dot right there on that inverted hammer right there? That was a warning. That was a bullish signal. That inverted hammer was a bullish signal. That was a warning that we could do what? Pop today and squeeze. And we did. It's so close to the dot that what should you have done? Cover. At least cover half, because the risk of the dot being close to the price action means it could flip underneath and squeeze you to death. And it did. Did I know that was going to happen? Hell no. But just because we're so close to the dot, it's a warning that your stop, you should be taking out the trade just in case. Here, because the price action's so far away from the dots, I'm not saying don't worry. I'm just saying you have a lot more leeway before the trend actually turns. Here, the trend turned right there. Now, granted, it took a 100-point drop before the trend turned, but it caught it 100-point late. But at least if you had even bought it, got short there, okay, you caught 200 points. This is trend. That's momentum. That's overbought, oversold. This is how I trade, but I'm not you. This is the way I do it, me. I want them as much as possible to agree, okay? I'm a contrarian, so I can't buy this. Why? Because it's overbought. So do I want to short when it's oversold, okay? Number one is that an extraordinary bullish candle? It is. That's one reason I can't short, and I won't. What's another reason I won't short, okay? The dots underneath the candle. That's another bull signal. Two bulls, nothing for a bear. What else? Okay. Did it take out a resistance level? It did. Bull argument number 3. So far, I want to go bearish, and I have 3 reasons not to. So I don't force the trade. Don't force the damn trade. If it's not agreeing with your system, don't do it. You got to obey the rules of your system or you're not going to last. You won't. I promise you, you won't. Obey the rules. Now, over here, is that bearish? Yeah, there's my only bearish argument so far. I have a bearish argument right there. It's bearish. Why? Because it's still below the 0 line and the MACD is below the signal line. So that might be a head fake for a continuation pattern where the actual MACD might do what? It might continue going downward. And this is all for naught. But that 3,400 is going to be like grim death. If the market sells off 64 points or 60 points, okay, there are going to be billions of computer programs buying right on that level. It's going to be like literally, it's going to be the Maginot Line. It's going to be DEFCON 5 right there. You can see it, okay, because it took that out, and that's where the PSAR dot is. So there comes your like next support. There's a support there, and there's a support there. So what I'm trying to bring to your attention is this, right? That's bearish. You could construe this as bearish, except one thing. It's still on the way up. See how it's on the way up? In order for me to construe it as bearish, it has to kind of go back through. It went through the negative 20 threshold, has to go back through. So that's bullish, 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 bullish. So let's take census, all of you newbies out there. Let's take census. I got 4 reasons to buy, and I got 1 reason to short. Easy. I'm not shorting. I'm not going to short. I got 80% reason not to do that trade. It's that simple. I keep it simple. People are like, but you're a professor. Doesn't matter. Everything to me is like, line up the ducks in a row. If they all like synchronize, do it. And if they don't, I'm not doing it. I'm not taking a short yet. I might, but things have to turn in the indicator system. Not to mention, this is day 1 of the breakout. This might consolidate sideways for a few days, then make up its mind to go lower. Maybe by Friday, it starts to come in. Maybe. Notice how I use the operative word maybe. I never said guarantee. I said maybe by Friday it might start to come in. And if it turns, it might be opportunistic. But once something breaks out, would you please pump the brakes? Calm down. You don't have to buy. You don't have to buy today. Don't chase this. You got a 5% move. You're chase. So let me get this straight. When it's down here, you have no interest. But after 5%, then you get interested? Ugh, stop. If you're going to buy today, tell me one thing. You're not buying as a position trade. You're buying as an intraday to scalp. Because this thing could easily roll over in a couple of days if some tweet comes out that, oh my God, Biden is taking back, Minnesota and taking back Ohio, whatever. It could roll on you and go back and give back 100. Then the technicals return. But if they turn, you'll miss it. Then I miss it. It's okay. It's okay. I'm a contrarian. I miss a lot of things. But one thing I don't do, I don't blow up my account. I survive. I'm a survivor. It's all it is. Theo trade is about what? Risk management, protecting capital. That's what I'm not here to be a homer. I'm not Giancarlo Stanton. I'm not going to hit you 50 home runs. I'm just going to hit a bunch of singles all the time. Okay, and walk away and go to bed and sleep really tight at night. That's it for me. I played that thrill of victory game years ago, made 7 figures, lost 7 figures. Let me tell you something. Once you lose 7 figures, your whole life changes. You're never the same person. You never will be. You'll never trade the same ever. You'll realize that this is a really tough business, and you've got to do what? You've got to take control and get a system and obey the rules of the system. Have trade discipline. The last thing, I got 5 minutes left. I'm on a tight schedule. The last thing I want to throw at is this, okay? I know we're up 99. I know we're up 513, okay? A lot of people love to look at volatility, okay? And I love looking at volatility. So here's one of my, primary setups, okay? It's a Bollinger Band. A lot of people know Bollinger Band. 20-day moving average, 2 standard deviation band below, 2 standard deviation above. Okay, so what does that mean? It means 95% of all price occurrences are going to occur inside these bands. There's a 5% margin of error where it goes outside. If you look outside here, as the bands are moving lower, okay, volatility is expanding lower, and so is the what? The DI minus, that's bearish. And as the DI plus moves lower, they widen. That's also bearish. That confirms it. But once the lower volatility band flattens out, what it did there, what have I taught all of you about it? The slopes of the bands matter. Once the band flattens out, what do? Get out of your short now, not in 3 days, because you'll be blown out like now. It's too late. You're too late. You blew it. If you had ridden this short down here, fantastic. But once it gets inside the candle, inside by the band, and that's what's known as a spinning top. It's almost a doji, okay? Do I know it's going up? Hell no. All I know is the volatility is what? It's stopped. So if you were short here and you're at the bottom of a band, you're vulnerable to what? Mean reversion right back to the moving average. Did that happen? Yep. Should it happen? Most of the time it does. Check it out for yourself. Mean reversion. Oh, this broke to the lower band. And then it kept going. And then it flattens out. Mean reversion. Then it goes to the top of the band, outside the band. Mean reversion. Okay, people, it moves in a zigzag pattern. So how do you exploit something like this? Come back to Theo Trade every day and I'll teach you. I'll be happy to teach you. Okay. Price action moves linear for a while, touches the top of the band, and comes backwards and forwards. This is the most popular indicator in the world, designed by John Bollinger. And for what it's worth, let me correct Don. I did not insult John Bollinger. I insulted John Person. Stop. Okay. Yes, I did. I couldn't care about Person's indicator. Person's this indicator, that indicator, whatever. Okay. He just piggybacked off a lot of other things, other people. He's a smart guy. Okay. But he piggybacked off a lot of other people's concepts. It's not stealing, but it's piggybacking. All right. See the zigzag? Okay. This might just very well go up there. It might. I don't know. But right now, the DI plus, DI minus is what? Okay. All it's telling you is this. Not to buy and not to sell. That means the range expansion is what? Dead center. Like you're dead center in the middle of the range. If the DI minus is above the DI plus, you buy. If the DI minus is below the DI plus, okay, you sell. Okay, or rather you sell. You sell when the DI minus is above and the DI plus is below. The DI plus is the bullish side of it. The DI minus is the negative side of it. The ADX is doing what? It's at 19. What does 19 mean? Non-trending. And if it's below 25, it's non-trending. So what have I deduced from this? Okay. You want to buy here, go for it. But I'm telling you right now, that ADX is negating that move. It's telling you right now that that move might be what? Short-lived. You know what? Come back tomorrow. A lot of you who were on the Zoom today, come back tomorrow. My suspicion, and I don't ever like to tell what happens, but just based upon what the ADX is suggesting and this capitulation action we're getting, my suspicion is this, okay? This sucker runs bone dry. Tomorrow we get an inside day, okay? Because the ADX is not validating that breakout. It's not at all. If that were a true breakout, that ADX would be ripping, and I mean ripping to the upside, and it's not. You want to see a true breakout, people? Okay, that's a true breakout right over here. See that? That's a true breakout. That breakout you just saw, we just getting right now, okay, this might be completely short-lived because the ADX is invalidating the strength of that move. Be aware, we're up 108. We are, but be aware tomorrow, this may give half of it back, give an inside candle, and we work our way downward once again, or we work our way sideways. Don't get too bullish, but respect what the indicators are telling you. On that note, I have come to the end of my 45-minute program. Tomorrow, I'll go back to my regularly scheduled program, which will be on support resistance. I'm going to pick up part 2 tomorrow, okay, of A Bridge Too Far, DIY, do-it-yourself forecasting method.